Hey, happy Friday out there. Jeremiah Conjure from Annuity Association checking in. We're back for another unbiased annuity review, guys. Really enjoying doing these, and a lot of our clients and prospective clients and anybody in general that's looking for information on annuities, they're really communicating to us that they're getting a ton of value out of these. So it's really just been a positive experience for us to start conducting these live video unbiased annuity reviews, and just a great day in general to do one. So just finished up with a couple client meetings this morning. Had an interesting case with a gentleman who within the last year had purchased a fixed indexed annuity from one of the big well-known popular insurance companies, and unfortunately the one that he got into was not the best one available for him on the market in regards to offering the highest amount of lifetime income. And so he, after buying the annuity from his advisor, he started to second guess if it was the best one for him and started to do his research. And he came across our information and requested a report. And after receiving the report, he instantly called and asked, is this information correct? Is this, these income amounts that I'm looking at, are those correct? And the answer was yes. And so he's really feeling like he should have done his due diligence before signing the agreements with his current annuity, and definitely feels that there were better ones out there for him. And if he would have came across ours in the beginning, he'd be in a much better position. So hopefully we can help him get out of that current annuity. We've already determined that it is a better fit for him, both from a lifetime income perspective, and get this, it also includes an enhanced income benefit for long-term care where it'll double the amount of guaranteed lifetime income. And that's one feature that his current annuity does not offer whatsoever. So we're getting him higher lifetime income guaranteed when he turns 62. And we're also giving him the opportunity for increased income in the event a long-term care event arises. So definitely excited to help him find a better fit for his retirement. So without further ado, we're talking about the Silac Teton Fixed Indexed Annuity. Now, if you watched our most recent review, it was also on a Silac product. That one's called the Denali. And today we're going to be talking about its sister product, which is called the Teton. So this is an exciting annuity. Both the Denali and the Teton have been doing extremely well in the marketplace. Silac Insurance Company is, really innovating on the fixed indexed annuity products themselves and offering a lot of key features that most other companies charge fees for. And they're able to provide all of these features and benefits with zero fees. So it's definitely something to stay tuned on this review to find out what those annuity benefits are, what those features are. And also we're going to be taking a deep dive into the rates and how the annuity grows, the index strategies that are available in them, and really an inside look at the mechanics of how these annuities work. So without further ado, I will get into the quick disclaimer that we have to cover before we get started, and then we'll dive into the product brochure. So thanks for your patience here. Let me go ahead and share my screen and get this pulled up. Okie dokie, here we go. So that is the brochure. Let's pull up the disclaimer first. So we're talking about the Silac Teton Fixed Indexed Annuity. This is an independent review by annuityassociation.com. Okay, so this is a review, not a recommendation to buy or sell an annuity. Silac has not endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors so they can see our perspective in breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, be sure to do your own due diligence and consult a properly licensed professional should you have specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of annuityassociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. All right, let's take a dive into the Teton Fixed Indexed Annuity offered by Silac Insurance Company. So I really like that they're not the only ones in this annuity world that are using mountains as their brochure picture, but they on their website, I was looking at it, and they give a definition of the Denali Mountains and the Teton Mountains. The Teton Mountains that are found in Wyoming, and they had a pretty cool explanation as to how they chose those mountain ranges and how they relate to the world of retirement and retirement planning. So the Silac Teton series offering growth and protection of your retirement savings. So why should you choose an annuity? Saving for retirement is increasing in importance as people live longer. Interest rates and stock market prices fluctuate and cannot guarantee at what rate your savings will grow. Annuities are designed to help you achieve your goals for retirement savings. They provide insurance against major financial risks, such as market losses and outliving your money. So they're a great product designed for safe accumulation and lifetime income. Silac Teton series may be a good fit if you're looking for guarantees. You can choose the certainty of a fixed interest rate that is annually declared and subject to minimum guarantees. Your annuity also has a minimum guaranteed value. You also may be interested in this annuity if you're looking for growth potential. The Teton offers the investor the choice of interest based on the performance of an external market index. And here I think is the most important one, or one of the most important ones, and that is protection of principal. When you're looking at a fixed indexed annuity, you're getting a contractual guarantee that every dollar that you invest is protected from market volatility. So your savings are always protected from market fluctuations and are 100% principal protected. There is no direct downside market risk to your funds. In addition, tax deferral is one of the many benefits of an annuity. Save more for retirement with tax-deferred growth. The Teton series allows you to keep more of your retirement savings working for you by deferring taxes until you choose to access the funds in your annuity. You also have access to your funds. Multiple liquidity options are available to help you when life throws a curveball. After the withdrawal charge period, you can always access the full account value of your annuity. In addition, during the surrender charge period, which we'll be discussing in more detail here momentarily, in the Teton annuity, you have access up to 5% of your available account value per year with no penalties incurred for early withdrawal. So 5% a year, make sure you take a note on that. And then wealth transfer, leave a legacy for your loved ones and avoid probate. The full account value is available after your death. If your spouse is the beneficiary, then he or she can always choose to continue the policy. All right, so there's really two steps to get started in really determining if this is the right product for you. The first one is to choose the length of your product. So Silac has designed 3 different contract periods or contract term products in the Teton series, and that includes the 7, 10, and 14-year versions. Now, the rule of thumb here, guys, is that if you're looking at an indexed annuity, generally speaking, the longer contract that you choose, the more growth potential you're going to have, because the insurance companies will offer higher participation rates, higher cap rates, and lower spread rates on the indexing strategies inside the annuity itself. So the longer you commit to, the more growth opportunity you'll have. And we'll be showing you how the 7, 10, and 14-year versions of the Teton indexed annuity has fared when looking at back testing over the last 10 and 15-year periods. So we'll be diving in, so stay tuned with us. We'll be diving in to see how the 7, 10, and 14-year versions have fared if you were invested in those over the last 10 and 15 years, and giving you some numbers to look at in terms of an average annual credited interest rate, so that you can potentially use that data to anticipate what they could potentially do from a performance perspective if you decide to invest with them moving forward. And then number 2, decide how you'd like your money to grow. The Teton series offers you flexibility to place your money in different crediting strategies. By placing your money in multiple interest crediting strategies, you are not tied to one crediting strategy, allowing for diversification within your annuity. Select from several fixed and index crediting strategies that best suit you. So that's one thing I feel is often overlooked inside of an indexed annuity, especially one that offers multiple index strategies and multiple crediting methods, is that we have the ability to diversify within the indexed annuity itself by placing a tranche of money in one index and one crediting strategy, and the other tranche of money in the other index that's available in the crediting strategy. So by doing that, you're getting some diversification so that in any given calendar year, there's a higher likelihood that you're going to have some type of interest rate growth as long as markets perform, because you're divvying your money up between two different indexes or three different indexes. So I think that's something that's important and often overlooked in the industry. So how does your money grow in the Teton indexed annuity? Multiple crediting strategies are available for you to choose from. The crediting strategies are used to determine how much interest, if any, will be credited to your annuity. You can allocate your funds among one or more of the available crediting strategies. You can reallocate at the end of each crediting strategy term. Gain comfort knowing your money is working for you and is protected from market fluctuations. The Teton series crediting strategies provide the following benefits. Number one is the annual floor protection of 0%. So when you buy an indexed annuity, there is a contractual guarantee that regardless of what happens with the markets or the index that you're associated with, in the event of a negative performance for the year or during your crediting period, you have a guaranteed protection with a 0% guaranteed floor. So the worst case scenario in any given calendar year is that you'll have a zero credited to your account. It's a lot better than a negative amount, believe me. Number two is the interest credit lock-in. Once interest has been credited to your account, it is locked in permanently and cannot be lost due to future market changes. So after your first contract year, if you grew your contract by 5% based on the index performance that you're tied to, once that 5% is there for that crediting period or that anniversary date, it's applied to your account value and locked in permanently. It can never be taken away from you due to future negative market performance. So very, very good peace of mind there. And then option three is the choices. You have multiple crediting strategies to choose from and can change your mind each strategy term. So they offer a fixed account and an index crediting account inside the Teton series indexed annuity. The fixed interest rate, we'll be diving into it momentarily. On the Denali, I know for sure it was 3%. We'll be diving into the fixed account on the Teton to see if it's the same or different. And then the index crediting strategies provide interest credits that are tied to the performance of an external market index. Keep in mind that your money is not truly invested in that market index itself. All the index is used for is a performance marker. It's what they use to determine how much to credit your account. It has nothing to do with your actual dollars going into that index and being exposed to risk. Your money is always sitting safely on the sidelines inside the annuity, and the index that you're tied to is just used as a market interest indicator to determine how much to credit your account. You're guaranteed to never earn less than 0% interest for the strategy term, even during market downturns. This is one of the key features of a fixed indexed annuity. In order to provide the annual floor protection of 0%, index crediting strategies limit the total interest you can receive. This limit is in the form of an adjustment, also known as a cap, participation rate, or spread. Next year's adjustments will be declared at the end of each crediting strategy's term. So let's talk about accessing your money inside the Teton annuity. So again, free withdrawals are available in this annuity. Each year after the first policy year, you may withdraw up to 5% of your account value as of the most recent policy anniversary. Free withdrawals will not be subject to withdrawal charges or market value adjustments if applicable. If you're using qualified money from an IRA or a 401k or other similar qualified account, required minimum distributions that are mandatory can also be withdrawn from these contracts. They are required for anyone over 70 and a half. Now the age is 70, been moved to 72. RMDs can begin immediately and are considered a free withdrawal even if they exceed 5% of the account value. So what that's saying is, let's say you have a 401k with $500,000 in it and you want to put $250,000 into the Teton annuity. Well, it's going to be called an IRA or a 401k rollover going into the annuity. So it's going to have the same tax deferred treatment that your 401k or IRA has, and there will not be any taxes incurred due to the transfer of monies because it's going from one qualified structured account to another qualified structured account in the annuity. Now, when it comes time to take required minimum distributions, which is required by federal tax law, when you turn 70 and a half, you'll be required to take out a certain percentage of monies from your qualified accounts. So if qualified dollars are now in the annuity, you will have to take out the required minimum distributions out of the annuity as a distribution and pay whatever taxes are owed on those dollars. But you will not be penalized if the RMDs or the distributions are higher or they exceed the 5% of free withdrawal amount. So if it was 7% that you have to take out to meet your RMDs for the year, you're not going to incur any penalties for doing that if you're still within the surrender period. Cumulative free withdrawals is next. If no withdrawals are taken in a given year, fully unused free withdrawals can be carried over to the next policy year. The maximum cumulative free withdrawal amount is 30% of your account value as of the most recent policy anniversary. Okay, so let's break that down. What does this mean? What this is saying is that if no withdrawals are taken, so if you sign up for the 10-year Teton series product, so it has a 10-year contract term, and no withdrawals are taken for the first 4 years, disregard the first year since you're not allowed to take a free withdrawal in the first year. But after the first year, you could take up to 5% per year every single year with no early withdrawal penalties. So if you're in the fourth contract year and you have not taken years 2 and 3, 5% free withdrawal, but you now need to take out some money in the fourth year, what this is saying is that the maximum cumulative free withdrawal equals 30% of your account value. So if you were in the fourth contract year and you could have took 5% in year 2 and 5% in year 3, then in year 4, you could take up to 10% of your money with no penalty because you never took the 5% that you could have taken in the previous years. Okay, so I hope that makes sense. Basically, they're saying, hey, if you never take money out, well, when that time comes and you do need more than 5%, you can take a maximum of 30% in cumulative free withdrawal. So that would be year 7. Okay, years 2 through 5 and year 6. Yeah, 2 through 6 would be 5% a year times 6 years. That'd be 30%. Year 7, you could take 30% if you wanted to with no penalty. Hope I made sense of that and breaking that down. So let's talk about some other benefits. Now, I'm telling you guys, when you look at the Teton and Denali series annuities from Silac, they really tried their best to incorporate all of the features that are available out there in these indexed annuities and do so without charging any rider fees. So I think that's their unique value proposition to the market. It really comes down to, finding value in the annuity and comparing it to all of the other indexed annuities that are going to meet your needs. And so just because they offer all of these features at no charge, it doesn't necessarily mean that they're going to offer the highest amount of growth opportunity or the highest guaranteed income or the highest long-term care income benefit. So what we recommend is if you're interested in comparing the Teton series indexed annuity to all of the other indexed annuities available on the market today, you can visit our website at annuityassociation.com. And right on the main page there, click on the green button to request your free report, and we'll send out all of the indexed annuities that meet your needs, and you can have a comparison of which ones are going to come out on top for accumulation or which ones are going to come out on top for guaranteed income. And that's what we do for you as a client. We want to make sure that you're making an educated decision. And if you're interested in doing that and speaking with us further, just go to the www.annuityassociation.com and request your free report. So the nursing home, terminal illness, and home health benefit are all available inside the Teton Series Fixed Indexed Annuity. After the first policy year, if any of these three events occur, you can access up to 100% of your annuity's account value with no penalties incurred whatsoever. So there are a few stipulations on waiting periods. So on the nursing home benefit, it says if you become confined to a qualified care facility for at least 90 consecutive days and meet the eligibility requirements, you can access to 100% of your annuity's account value, even if you're still within the surrender period or the contract term. On the terminal illness benefit, the only requirement there is if you're told by a licensed physician and diagnosed with a terminal illness that results in you having a life expectancy of less than 12 months to live, then you would have access to 100% of your annuity's account value, even if you're still within the surrender period. And then last but not least, that home health benefit, same thing applies there. After the first policy year, you can withdraw up to 100% of your annuity's account value if you need home health care services and meet the eligibility requirements. So Silac is really doing their part in addressing a lot of the misconceptions out there in the annuity world that, oh, you tie up your money, there's no liquidity, what if an emergency happens, blase, blase. All of those things are covered in this product, and a lot of the other products on the market are also covering these crucial life events that may occur in retirement. So you have to understand these insurance companies, their demographic are retirees and pre-retirees. They understand also what occurs in that stage of life for you entering retirement. There's most likely going to there's most likely going to be a catastrophic event that occurs, most likely from a health-related incident. And they know that if that happens, you need access to your money. And they're not in this to hold your money and keep it from you. They're in this to, add value, provide value, grow your money safely, and provide income options. And worst case scenario, if those events occur, you have peace of mind knowing that 100% of your money is accessible with no penalties. Very, very cool options there. Now, in regards to income options, the only difference between the Teton series annuity and the Denali series annuity is that in the Denali series, they offer the option for lifetime income. They give you a lifetime income rider at no charge that you can convert the account value to a lifetime income stream regardless of what happens. Now, on the Teton, they do still offer an option for lifetime income, but it requires you to do what's called annuitization of the contract. If you decide to annuitize your contract, annuitize means you're losing control of whatever's left in the account value in exchange for the lifetime income amount. Now, only about 3 or 4% of all indexed annuity contracts out there today actually elect to annuitize the contract. It's not something that's commonly done. But in the event you decide, hey, I really want the lifetime income, and you shop around and you find out that, hey, the Teton is going to offer me the highest lifetime income no matter what, versus anything else on the market, then maybe you elect to do that. But again, only 3 to 4% of contracts out there actually go through the annuitization process. It's not really done these days because of the lifetime income riders. Now, the lifetime income rider on the Denali, what that does for you is that you're not annuitizing the contract, aka giving up control of the money in the account in exchange for the income. When you have a lifetime income rider, yes, you turn on an income stream and it starts to come out of your contract value. But in the event you need access to more liquidity, or you decide to just cut out of the contract and cancel it, you can withdraw all of the monies that are remaining in the account, and those are yours. So you still have a level of control over those dollars. The wealth transfer is also an option here on the Teton series. It automatically includes a death benefit to help leave a legacy for your loved ones. Your beneficiary will receive the annuity's full account value. Your loved ones will avoid the delays and hassle of probate, and the death benefit will be paid as long as an annuitization option has not been elected. Okay, you hear that last sentence? The death benefit will be paid as long as an annuitization option has not been elected. So when you annuitize a contract, you give up control of the remaining account value. If you annuitize the contract, you also give up control of that death benefit that would be paid to your beneficiaries. So again, that's why only 3 to 4% of contracts out there actually go through that annuitization process. Interesting feature too is the spousal continuation. If your spouse is an owner or beneficiary, then he or she can always choose to continue the policy. That's a really nice option for peace of mind there. And not going to cover any of this stuff. This is also things that we've covered here, just more redundant information. But let's take a quick look at this chart here. It's basically showing you everything that's included in the Teton. So you get the fixed interest, index interest, annual floor protection, annual lock-in of interest, free withdrawals, years 2 and beyond, required minimum distributions, years 1 and beyond, cumulative withdrawals, nursing home benefit, terminal illness benefit, home health care benefit, income options, full account value, death benefit, and the spousal continuation at death. All of those are automatically included in the contract for the Teton 7, 10, and 14 contract year period, and there's no charge for any of those features. So that is really their value proposition, is that, hey, we're going to give you all of these unique features that other companies would maybe charge a fee for, but we're going to do so at zero charge. Very, very cool. And then the basics here on the 7, 10, and 14 year, there's no minimum issue age. There is a max issue age on the 7 year, which is age 90, on the 10 year, age 85, and on the 14 year, age 80. Minimum premium investments, $10,000 for all 3 versions. And you can add additional premiums in the contract for the first 12 months. Maximum total premium is $1 million. Okay, and then it says on the 14-year version, the max issue age in the state of Florida is 64. Now, if you have more than $1 million and you're looking to put that into this annuity, it is possible. We just have to get the home office approval. All right, so let's talk about Silac Insurance Company. They've been around since 1935, and they are actually the state of Utah's oldest active life insurance company. So they are initially a family-operated company that started back in 1935, and they've continued to grow and really hone in on their practice, and recently have become, an up-and-comer in the indexed annuity space. So they are a seasoned company, been around for a long time. They're based out of the Salt Lake City, Utah, and they really have a commitment to caring because they've been doing just that for a very long time. So they talk about customer service being their number one priority and providing safety and security for their policyholders, continuously expanding their product platform, which is evident with the Teton series indexed annuity, and they've been proudly serving customers for over 80 years. Okay, we've covered the brochure. Now let's get into the fun stuff, and that will be our analysis on the Teton series indexed annuity. So bear with me. I'm going to pull up our software here and we'll dive right in. Thanks for your time today in this review. Hope you're getting a lot of value. All right, so now we want to really talk about the design and the intended purpose behind the Teton. The Teton is a pure, safe, accumulation-focused indexed annuity. So what does that mean? It means it's going to offer very, very competitive growth opportunities using index strategies to give you the most amount of safe growth on your principal. So what we do here at Annuity Association is we go through and do a analytics test to determine how well these products would have performed when looking back over a large period of time. So we tend to look at the 10, 15, and if possible, the 20-year periods, looking backwards to see how they would have performed hypothetically if we owned this annuity during those time frames. So we take a look at the indexes that are offered in the annuity, and then we compare it when looking back over the market history to see what the returns would have been if we owned this contract during those times. So if you notice right here, right off the top, the 14-year version of the Teton is number 1, using the 1-year Barclays Atlas 5 point-to-point with the participation rate. So what is that? What is all that? If you're new to indexed annuities, really it comes down to understanding the indexes that are offered inside the indexed annuity. The indexes are what are used to indicate the performance or the interest credit to the investor. So when you're looking at an indexed annuity, you want to make sure that you're selecting the ones that offer the most competitive and consistent, that's the key word, consistent index strategies offered on the market. So the Teton right now really shines because it has one of the stronger index options available in the indexed annuity marketplace, and it's made by Barclays. It's the Barclays Atlas 5 using a participation rate strategy. Now, this is a 1-year point-to-point. So what that means is on your issue date, so if you decide to put an application and buy this annuity, on the date that the policy is issued, that is your anniversary date. They're going to give you the starting value of the Barclays Atlas 5 index, where it is on the market at that date. And then when you eclipse 1 year, so you have your 1-year anniversary, they're going to look at the ending point or the ending value of the Barclays Atlas 5 index. And if the ending point is higher than the starting point at the end of that 1-year term, then the index has had positive growth and you're going to get credited interest. Now, what does the participation rate mean? Participation rate means of the index's performance, how much do you as the investor participate in? So for example, I'm just going to use an easy number. If the index went up 10% in that 1 year, at the end of your anniversary, it went up 10%, then you're going to get 117%, since that's the participation rate. You're going to get 117% of that 10% growth. So your contract would actually be credited 11.7% for the year. Okay. So when we look at the Teton 14 using that 1-year point-to-point Barclays Atlas 5 index with participation rate, when we look at the last 10-year period from December 31st of 2010 to December 31st of 2020, the average annual credited interest rate is 8.13%. Now, if you look just below that, you'll see a green and red number here on my screen. The green number and the red number are indicating the best and worst 10-year period when looking back over the last 20 years. So on the best period from March 22nd of 2005 to March 22nd of 2015, if we owned this contract during that time frame, our average annual credited interest rate would have been 9.73%. On the other side, the worst 10-year period was October 5th of 2010 to October 5th of 2020. If we owned the contract during that period of time, the average annual credited interest rate would have been 7.21%. Okay, so this is very important data, and I always advise prospective clients when you're making your decision on if you should buy this annuity or not, don't get caught up in the best case scenario. Make your decision on the worst case scenario. So if you are looking at the worst case scenario, and in this case, when looking back over the last 10 years or the worst 10 years over the last 20 years, and we can determine that it would have done 7.21%, make your decision on that number. If you can sleep at night knowing, hey, regardless of what happens, I know worst case scenario, 7.21 is my bottom line, potentially. I mean, one thing we have to point out is that prior performance is not an indicator of future performance, but it's still important to know to help us make educated decisions. But if you can get sleep at night knowing 7.21 is potentially the worst case scenario, then buy the annuity. If that's not good enough for you, then look elsewhere. So over the last 15 years, we have data going back on the last 15 years, December 31st of 2005 to December 31st of 2020. And the average credited interest rate over that period of time, if we own this contract during that period, was 7.13%. So very, very good numbers there. I really want to point out that that 10-year period, looking at that 8% number with no market risk, there's not many financial vehicles out there. Really, to be honest, there's zero out there that can provide this type of return or this type of opportunity for that number of return without taking risk. So keep in mind, you have a 0% floor. The worst case scenario in any given year is zero. Whereas if you were to try to make that type of return in the stock market, you're exposing yourself to risk. And if the markets go down, you're going to have a negative number credited to your interest rate or account value, but rather it be taking from you because of it being negative. This, your principal is 100% secure. You can never lose $1 due to market losses. All right, so let's see how the 10-year version had fared out during the same time period using the same Barclay 1-year point-to-point Atlas 5 with the participation rate of 100% on the 10-year. You'll see the average credited interest rate over the last 10 years is 6.96%, best 10-year period 8.34%, and worst 10-year period 6.18%, and the average 15-year period being 6.11. Now, why do those numbers change? Why do they go down? Well, again, if you remember back earlier on in the review, I said rule of thumb is the longer that you commit to from a contract perspective, the higher growth potential there will be, because these insurance companies will give you a higher participation rate, which is used to factor in how much of the interest you get when the index performs. If we look at the Teton 14, the participation rate was 117%. When we look at the Teton 10, the participation rate's 100%. So that 17% difference on the par rate is factoring into these numbers. Let's look at the 7-year version, do the same exact thing. So on the 7-year version, let's look at the participation rate first. So on the participation rate crediting period or crediting strategy, the 1-year Barclays Atlas 5 point-to-point participation rate, the participation rate goes down to 85% on the 7-year. And with that being factored in, the average 10 years over the last 10 is 5.93%, best 10-year period 7.1%, and worst 10-year period 5.26%. Average annual credited interest over the last 15 years using that strategy is 5.2%, hypothetically, if we were invested in this contract during that time. Now, you'll notice that on the 7-year version, it is not the highest crediting strategy when using the back testing. What actually comes in is still that 1-year Barclays Atlas 5 point-to-point, but instead of a participation rate, they're using a spread. Now, the difference is that when using a spread rate, we'll see the spread rate is 75 basis points, or 0.75%. When you look at a spread rate, what that is basically a haircut off of whatever the performance of the underlying index is. So, for example, if the Barclays performed at 7% for the year in your contract, and you have a 75 basis point spread, they're going to subtract that 75 basis points off of the 7%, so give it a haircut, and the net return that you'd be credited with in the contract would be 6.25%. Okay, again, if it was a 7% performance for the year, minus that 75 basis points or 0.75%, you would be credited as the contract holder 6.25%. So hope that makes sense. Okay, so In addition, what we do here at Annuity Association is really weigh out all of the different indexes that are available, all of the crediting strategies that are available in the contract, and back test them to determine which ones would be the best, hypothetically speaking, when moving forward. And in this case, we determined that on the 10-year and the 14-year version, the 1-year Barclays Atlas 5 point-to-point with participation rate is the highest. Now, on the 7-year version, that spread strategy is actually going to come out as the highest. We're not real big advocates on spread rates. We prefer participation rates if they're available and they're competitive. But the nice thing about the Denali and the Teton series annuities from Silac is that you're not locked into these long term. So you can switch your crediting strategy on an annual basis. So if you go with the spread rate on that Barclays Atlas 5 and you just don't feel comfortable anymore, the very next year you could change it to the participation rate strategy, or you could do 50% in the spread rate strategy, 50% in the participation rate strategy. You have that flexibility, which is very nice. So let's also take a look at the other crediting options, the index options that are available in the Teton series annuity. In addition to the Barclays Atlas 5, we also have the S&P 500 point-to-point using a monthly sum cap. And we'll see how that fared. That on the 14-year version product, we're looking at a 6.48% average annualized credit return rate over the last 10 years. 6.48% is the best 10-year period, and 2.94% worst 10-year period over the last 20 years. And on the 10-year version, that S&P 500 is going to come in slightly lower at 5.18% for the 10 years. And then on the 7-year version, that S&P is going to come in at 4.7. So when you're looking at these, definitely want to know your options and know the indexes and crediting strategies that are available, but really want to exercise the back testing because it's going to tell us and give us a more educated decision, or help us make an educated decision on which one's going to give us the highest growth opportunity. So let's go ahead and I know we're running on the back side of this review. So one last thing to do is really let's dissect this Barclays Atlas 5 and take a look at the longevity of this index and to see how it's performed, hypothetically speaking. We can take a look at everything from the year-to-date performance dating back to January 1 of 2021 to today. And then also look at last year, 2019, the last 5, 10, and 10-year periods to determine, how this thing is done. So on the Atlas 5, year-to-date, it's up just under 1% performance. So we're still early on in the year, in the middle of February here. So don't judge this index just off of that. Definitely early on in the year. But if it's, averaging, so far just under 1% for 2 months, 45 days, I mean, it's averaging almost 10%, for the year if you run that out for 12 months. Last year, it performed at 7.51%. Okay, this is not factoring in any of the participation rates. This is just the pure performance of the index itself. 2019, it performed at 11.28%. The last 1 year returns 4.61. Last 5 years, okay, which is the annualized rate over the last 5 years, is 4.99%. The last 10 years, 6.75%, and since inception, 7.29%. Now, these indexes have stock tickers, just like any other stock market product. And you can actually visit the website for this index, and it comes directly from Barclays. And you can really take a look at, what makes this index different from the next one. All of these indexes are comprised of different strategies and performance indicators. But to summarize the Barclays Atlas 5, it's what we call a multi-asset risk-controlled index. Not to get too far in the weeds there, but basically the way it's designed is it uses algorithmic-based learning to dynamically shift the assets inside the index from one asset class to the next based on the level of volatility that's being experienced in the market. So why is that important? It's important because it gives you, the investor, the ability to still make interest or earn interest in a very volatile market. So when a volatility period spikes, then the index itself looks at where that volatility is occurring across the asset class marketplace and shifts the dollars of the assets in the index to an uncorrelated asset class to allow the index to hedge that volatility and give you, the investor, earning potential. So if you're interested in finding out more, you can go to our website at annuityassociation.com and request your free report. And when you get the email from me, you'll actually have an opportunity to schedule a time to speak if you'd like to do that. Or you can go right to this website here, Barclays, and look at the index itself and be able to get all of the key information that you're looking for to determine, how this thing is comprised and how it works. So without any other information to go over, I think we've really covered everything from the brochure to the features, benefits. We talked about the growth opportunities with the participation rates, the different index options that are available to you. And in addition to that, we've also talked about the index itself, the Barclays Atlas 5. The last thing that I'd like to cover, and we'll end on this note, would be that the Teton series annuity, as well as the Denali series, offers a bonus from time to time. They have a bonus series product. Now, I always advise prospective clients, do not get caught up in the bonus. And for more or less, the bonus is just marketing fluff. It's just to be able to give an incentive to invest with that annuity or buy that annuity. And advisors and agents will use the bonus and oftentimes lead with the bonus to persuade someone to buy it. Now, I'm not saying bonuses are bad. In most cases, they are value. It is adding value. But keep in mind that in the event there's a bonus being offered, they may be pulling other benefits from other areas of the contract, whether it be participation rates or charging more for the income rider or something along those lines to be able to provide the bonus. There's no free lunch in any industry, so keep that in mind. But let's take a look at the bonus series options, just so you know what those bonus amounts are at the time of this review. And you can determine and make an educated decision on, is the bonus worth it? So when we look at the Teton, if you look at all of these, versions, that's 14, 14, 10, 10, 14, none of these at the top, when doing the back testing, are including a bonus. None of these contracts don't include the bonus. Now, if we continue to scroll down, here's the first one, the Teton 14 with a bonus of 10%. What does that mean? It means every $100,000 that you invest in the Teton bonus 14, they're going to give you $10,000 of bonus money applied to the account value that's vested over the life of the contract. But if you notice, remember this back testing tool is showing us the hypothetical performance when looking back over the last 10 and 15 year periods. Well, we notice that the 14 on the bonus version is significantly lower at 6.18 versus the top at 8.13. The top version offers no bonus. There's no 10% bonus on this version, but you're getting a higher participation rate in exchange for no bonus. And when back testing it, it performs almost 2% higher per year on a compounded annual interest rate. That's huge. So you have to weigh out, is 10% bonus worth it? Is a $10,000 on every $100,000 investment worth it for less opportunity for growth over the long period, over the long term? So here's that 10% bonus right here, Teton bonus 14, same spread rate or same index strategy, but on this one they're offering a spread. Remember, the spread's a haircut. They're taking 1% off the performance every time there's a positive gain on an annual basis. So if it was 10% for the year, you're going to take 1% off for the spread. you would get credited 9%. So when you look at it that way, they're recovering that bonus over the longevity of the contract by charging the spread. So just be very cognizant that if someone you're speaking to is really pushing the bonus hard and not really just showing you how the product stacks up from a back testing perspective and from an illustration perspective on income, all that matters is the bottom line. If you're looking at an income annuity, who's offering you the highest guaranteed income? If that highest product also offers a bonus, then that's just icing on the cake. But if that highest product doesn't offer a bonus, but it's still the highest guaranteed income, isn't that really all that matters? It's who's going to pay you the highest guaranteed income. Don't get caught up in the bonus is all I'm trying to say. There are a few products, I can count them on one hand, that lead in the intended purpose category. So if it's guaranteed income, they offer the highest guaranteed income and a bonus. That's great. If it's a pure accumulation focused indexed annuity, there's only a handful that offer the highest growth opportunity because of the par rates that are offered, and they offer a bonus. That's icing on the cake. But there's a lot of these products out there that are not in the top 5 or 10 in regards to the offering, but they offer a high bonus, and that's just marketing fluff. Don't get caught up in that, okay? So I'm off my soapbox now, just really trying to help you understand this annuity space to help you make an educated decision on which one's right for you. And I speak to people all the time that say, well, this guy's offering me a bonus. Well, I'm not offering you a bonus, but I'm offering you a contractual guarantee with the highest amount. Which one's more important? You know, so that's how we take a look at everything. But if you have a product that has a bonus that you're being pitched right now, and you want to compare it apples to every other independent annuity product on the market today, visit our website at annuityassociation.com. Right on the main page, click the green button to request your free report, and we'll give you those apples to apples comparisons that you're looking for to help you make an educated decision. And in the event that the products we're showing you are better than the one you're thinking about buying, hopefully you'll come and speak to me and we can do some business together. I'd love that opportunity to help. So without any more information here to cover today on this unbiased annuity review, I want to thank you for your time for tuning in and hope you have gotten some value out of this and hope you have a great rest of your day. So thanks so much. Jeremiah Conjure signing off from Annuity Association. Take care of one another. Bye-bye.